As of this Sunday, December 21, 2025, the market is currently closed, but the closing figures from the most recent session on Friday, December 19, present a picture of a company that is finally starting to command the attention it has sought all year. Rezolve AI PLC, trading on the Nasdaq under the ticker RZLV, finished that session at $2.55 USD, which represents a massive gain of 0.35 or 15.91% in a single day of trading. The interest did not stop when the closing bell rang, as the after-hours activity pushed the price up an additional 0.06 or 2.35% to settle at $2.61 USD. While many retail participants might look at a stock trading in the $2 range as a speculative gamble, the reality of what is happening under the hood of this business is starting to break through the initial skepticism. The common expectation for many small-cap AI firms throughout this calendar period was that they would burn through their cash reserves before achieving any meaningful scale. However, the reality for Rezolve AI is that they are currently projecting a December revenue figure exceeding 17 million USD, which is a staggering jump that most analysts simply did not see coming when the stock was languishing near its lows earlier in the year. This sudden 15.91% surge is the market reacting to a massive disconnect between the narrative and the numbers. For months, the narrative was that Rezolve was just another name in a crowded field of companies trying to catch the tailwinds of Nvidia stock or Apple stock without having a real product. The reality is that their annual recurring revenue, or ARR, is now expected to cross the 200 million USD mark by the end of this month. When you consider that their original target was 100 million USD and their revised guidance was 150 million USD, you begin to see why the institutional desks are starting to scramble. This is not just a minor beat, this is a total recalibration of the company's growth trajectory. For anyone involved in self-investing or using various investing sites to find the next big move, this kind of guidance revision is the gold standard for a potential breakout. While casual traders are busy looking at the daily fluctuations of Tesla stock, the smart money is looking at how a company like Rezolve is integrating into the global retail infrastructure through its brain suite. The trading volume on Friday was exceptionally high, indicating that this wasn't just a retail-driven pump, but a significant repositioning by larger accounts. When we see a stock move nearly 16% on heavy volume, it tells us that the previous resistance levels are being tested by actual conviction rather than just momentum. In the world of online investing, many people get caught up in the ease of use of a Robinhood app or the simplicity of Robinhood fractional shares. But for a stock like RZLV, you have to look at the institutional footprint. There is a growing sense that the company is transitioning from a show-me story to an execution story. If you are managing your own individual brokerage account or perhaps using a Fidelity trading platform, you have likely noticed that AI-related software stocks are starting to decouple from the hardware providers. While Nvidia stock remains the backbone of the hardware side, companies like Rezolve are proving that the software layer is where the recurring revenue and the high margins will ultimately live. When we talk about investment help or look for a solid investment, we often look for companies that have a clear moat. Rezolve's moat is becoming visible through its recent acquisition of Crownpeak for 90 million USD. This move was a clear signal that they are not content with just being a small-scale provider. They want to own the digital experience platform space. By combining their proprietary AI with Crownpeak's established customer base, they are creating a synergy that the market is only just beginning to value. The expectation was that Rezolve would struggle to integrate such a large acquisition, but the reality is that the combined entity is showing positive adjusted EBITDA for the first time. This is a massive milestone for any growth stage tech company. It moves them out of the speculative category and into the sustainable growth category. This is the kind of transition that usually leads to a multi-month or even multi-year re-rating of the stock price. If you are currently using something like Schwab Intelligent Portfolios or a SoFi Robo-Advisor, you might not see Rezolve AI on the radar just yet, because these automated systems often lag behind the curve on small-cap breakouts. But for those who prefer active investing or use an interactive broker's account to stay on the edge of the market, the signs of a bottom being formed are hard to ignore. The stock has been under significant pressure for much of the year, down about 42% year-to-date even with the recent spike. This creates a tension between the past performance and the future potential. The expectation of further decline is being met with the reality of record-breaking monthly revenue. This is exactly the kind of situation that creates a short squeeze or a rapid accumulation phase, as those who were sitting on the sidelines realize they might miss the initial liftoff. Let's talk about the business model for a second, because it is worth understanding why this is different from a typical chatbot company. They are focused on what they call conversational commerce. Instead of just giving you a text box to talk to, they are integrating AI directly into the checkout and product discovery process for massive retailers like BJ's Wholesale Club and Kohl's Supermarkets. This is a deep integration that is hard to displace once it's in. When you think about the Fidelity mobile app or the SoFi investing interface, they are built to be user-friendly. Rezolve is doing the same thing for the retail world, making the process of finding and buying products seamless across both online and offline environments. Their partnerships with Microsoft and Google are not just for show. They are providing the cloud infrastructure and the reach to get these tools in front of millions of consumers. This is why their ARR is growing at such a clip. It is not just about signing new customers, it's about the scale of the customers they are already working with. I want to pause here and ask for your input. Comment below how many shares of RZLV you currently hold in your individual brokerage, or if you're waiting for a pullback before jumping in. Do you think the 200 million ARR target is sustainable, or is the market being too optimistic about the December numbers? Hearing your take helps us get a better sense of the sentiment on the ground. Now, looking at the technicals of the move, we have to acknowledge the macroeconomic pressures. While the fintech and AI sectors have seen a lot of volatility, the recent pivot in sentiment towards small caps is providing a favorable backdrop for Rezolve. If you look at the Interactive Brokers platform or the Fidelity brokerage tools, the heat maps for the last few sessions show a distinct shift into mid and small cap growth. This is partly because the valuations of the mega cap tech stocks, like Apple stock, have become so stretched that investors are looking for better growth to value ratios elsewhere. Rezolve, with its current market cap and its massive revenue growth, presents a compelling case for those who have the stomach for a bit more risk. It's a different kind of investment than a steady-state utility or a legacy bank you might find through Fidelity Wealth Management. It's a pure-play growth bet on the future of how we interact with brands. The comparison to other online investment platforms like Robinhood or SoFi is actually quite interesting. Those companies had to spend enormous amounts on customer acquisition to grow their user bases. Rezolve is taking a different path by partnering with the giants who already have the users. By being the AI engine behind the scenes for a company like Google or Microsoft in the retail space, they are piggybacking on existing distribution networks. This lowers their acquisition costs and speeds up their time to market. This is the reality that is starting to exceed the expectations of those who thought they would have to build everything from scratch. It's a much smarter, more capital-efficient way to scale a technology business in 2025. Looking forward, the catalysts are numerous. We are waiting for the final audited figures for the year, which will likely confirm whether they truly did shatter their ARR goals. We are also looking for more details on the integration of Crownpeak and how that is impacting their margins. If they can continue to show positive adjusted EBITDA while growing revenue at double or triple digits, the stock will likely not stay at $2.55 USD for long. There is also the possibility of a further equity raise to fuel more acquisitions, which is always a risk for current shareholders in terms of dilution. However, if that capital is used to buy high-quality assets that are immediately accretive, the market tends to reward it rather than punish it. This is a far cry from the earlier days of the year when every piece of news was met with selling. In the world of online investing, sentiment can change in a heartbeat. One day you're looking at your Robinhood investments and everything is red, and the next day a single piece of news about revenue targets can send a stock up 16%. This is why it is so important to stay informed and look beyond the surface level. The people who are just following the crowds on the most popular investing sites are often the ones who arrive late to the party. By the time a stock is being discussed on every Fidelity trading platform or Interactive Brokers stock channel, the biggest moves have already happened. The opportunity in RZLV was there for those who were watching the ARR guidance changes back in October, and it is still there for those who believe in the $500 million exit rate target for 2026. To wrap this up, let's summarize what we have seen. The expectation was that Rezolve AI would be another struggling small-cap AI firm. The reality is a company that is reporting record-breaking revenue, shattering its ARR goals, and moving towards sustained profitability through smart acquisitions and global partnerships. We saw a 15.91%